Hey guys, this is Ryan Butcher. I am going to be using the Thinkorswim uh, paper trade account to try to take my account from $50,000 to $100,000 in the shortest possible amount of time, so basically just 100%. And I'm going to be doing that by trading the SPX, and we're going to be, this might sound crazy, but we're going to be trading in $10,000 lots. And we're going to trade those $10,000 to make 500 or more. Um, I guess it would be like this: 500 or more uh, per trade. And the way we do that is called using verticals, which are also called spreads. And the reason why we're going to use SPX is that it is cash settled. And what that means is you can't um, they won't make you buy the shares of it in the future. So, say I was doing this in Apple, and I had an option and it closed in the money, which I'll explain later. But they could assign me the shares, and I would have to use margin and use up a lot of my inventory, a lot of my money to buy that. So I don't want to do that. So our whole goal is a minimum of $1,500 a month. Outstanding goal would be $7,500 a month. And for May, personally, I'm up, depending how you look at it, and I'll explain that, $4,000 to $9,000. I made a trade that profited me $5,000. So I probably wouldn't have done that in my real account, but I wanted to test it, and this is a paper trading account. So my if I go over to my account statements and we take a look at SPX, you can see that I'm up 8,790. So I have to take about 5,000 off that. I guess I'm up $3,790 for the month. So it's about $1,000 a week, which is above my minimum goal that I would like to hit. Some months, I may not make that. I might just make $500 a month or whatever. But I'm between my goals, so that's totally fine. And we're going to be doing this um, through looking at a bunch of different things. We're going to be looking at charts. We're going to be looking at analyzing trades through this Analyze tab, and we can take a look at probability analysis and all sorts of different things if we so choose to. We're also touch base on the Greeks. I'm not going to get into any math because to be honest, I don't know much of the math behind it. Um, and so we're just going to touch kind of the meanings of them, but we're not going to go into much more detail than that. And then we're also going to be taking a look and learning about volatility and so it's called a IV crush. And so we're going to be taking a look at that. So volume as well. And that's something I'm still trying to conquer myself, and why I'm still doing some paper trades in this, because uh, timing, timing can be everything. I took a trade on Monday. I sold some options on Monday for 50 cents, and I could have sold them on Tuesday for 70 cents. That would have been an extra 20 cents in my pocket, or $200 per contract in my pocket if I had chosen to, well, extra $20 per contract if I had chosen to wait till Tuesday and understand that. So that's something I'm still learning personally. But we'll go through these things step by step and try to go through the basics. And it's taken me, to be honest, I've only traded options since February. I've lost money, and in losing money, I've learned my personality. I've learned what works for me, what doesn't. And there are many strategies out there, and I am always willing to learn new strategies and always going to look at new strategies because I enjoy learning that. But I am finding something that works for me right now. And this is what we're going to be going over and what I'm going to be blogging about. So hope you enjoy and look for updates.